Drew, obviously the market under some pressure here, in part because of this switchback in the AI names. But the Fed is part of the story, I guess. At some point, we're pretty sure Fed was going to be easing into a decent economy. How do you see that equation?
Well, I think the Fed's talking about not easing into a faltering economy, because I think, the data that's come out, that the housing data is just yet another kind of thing that doesn't make sense if the economy is as strong as people are arguing it is. If you look at the data is clearly weakening. If you're looking at companies, companies that are missing or announcing layoffs pretty quickly thereafter. So firms are trying to figure out how to manage their expenses and how to manage how many people they have. And once enough firms basically announce layoffs, it kind of becomes okay for other firms to announce layoffs too. And I think you're beginning to see this kind of downward trajectory in the labor market. Even though we don't have the official government data, I think it's pretty clear that firms are actually moving towards kind of a cost containment, reduced employment story. And that should keep the Fed moving rates lower, but they're talking like they're not going to.
For sure. And I wonder if trying to figure out if the market immediately is going to rush to the conclusion that holding rates here in December would be a mistake. I mean, maybe you would expect the 10-year to rally more. I mean, 10-year yield's actually up a little bit on the day. Does that fit into the narrative at all?
It doesn't really. If the economy, if they're not going to ease, then actually I would expect that's actually more likely to pull the 10-year yield lower. And the reason for that is because if they're not going to ease, I think the economy has a greater potential of weakening and weakening over a long period of time. And so, in my mind, I don't actually see the 10 years being the problem here. I think the problem here is that, the market needs to see the Fed as kind of a consistent player over time, and instead we're getting this kind of jerky reactions from the Fed where it's like, oh, we need the lower rates. Oh, wait, 50 basis points was enough. 50 basis points is rarely enough. It usually is the trend in activity from the Fed that matters. And people don't believe the trend is there or may not be there after December, because if they don't go in December, they're not restarting in January. And so, I think this Fed has to get maybe a little more aggressive in their communication strategy, a little more consistent in their communication strategy. I think people understand that there are differences of opinion within the Fed, but really the direction of travel, in my mind, should be obvious given a lot of the noise that we're seeing from companies, oddities and foreclosures, et cetera. There's just something not right with this economy. I think and that's important.